Good afternoon, everyone. Welcome again to Elliott Wave News Channel by Wave Strategy Advisors. This is Ashish Kyal here, and today we will be talking about the trading strategy before the budget, which is to be announced on 28th of February on Saturday. The markets are working on that day. Before I proceed on the Elliott Wave structure of Nifty and Indian equity markets, I would like to announce a training seminar of mastering Elliott wave and Neo wave that we are going to conduct on 14th and 15th of March here in Mumbai. And it's a most comprehensive training that we are ever conducting, and this is going to cover somewhere around more than 100 different charts on which the practical application of technical analysis, Elliott wave, Neo wave, time cycles will be shown across. And prior to the training itself, we will be sharing across 1 week of Elliott Wave training videos, so that everyone who attends the session is up to the mark, and start with the kickstart with the advanced concepts of Elliott Wave and Neo Wave. So please join me there on 14th and 15th March. For any information, you can also reach us at helpdesk at wavesstrategy.com, or you can call us on 9920422202 for any information. Now let's proceed on to understanding the current structure of the market. Indian markets have been moving in an absolute range bound action over past few days, unless yesterday there was a sharp movement on downside where Nifty corrected and broke the support level of 8790 and has been sustaining that today as well. Price made a low below the prior day's low, which is keeping the short term bias on the downside. On the weekly basis, if we check, there was an evening star kind of a pattern, and the same pattern, the weekly low has been taken out. So the weekly trend also looks to have turned negative. The participation in the banking index is absolutely not there. This was the index which was leading the rally before, and this index has actually broken the prior low in faster time. And the retracement on banking index, if we check, is hardly 50%, which is comparative to Nifty, which retraced exactly 80%. This shows a lag behavior uh, on bank Nifty, and it is a cautious sign definitely, because banking stocks have not participated in the current up move. There is already a lot of euphoria which is created given the budget to be announced on Saturday. However, we think that budget can be a very important key reversal day, given the facts that there are a lot of expectations and everything is already discounted in the run up that we have seen over past few weeks. And even then, Nifty has not taken out the prior high of 8996, and it has reversed back from 8800 levels, 8000 870 levels. And this looks like this can be the next leg on downside, which should at least touch the level of 8650, where 8650 to 8600, from where the recent up move started. 8470 is not the end. As per our internal counts, we think that the exact termination of the prior leg down was at 8600, and from 8600 the up move which we saw was probably a C leg, and we are currently in D leg of a triangle which should complete somewhere around 8600, and then post that we should again see a minor bounce back on upside in form of wave E. Now suppose this 8600 level is taken out in less than 3 days, over next 3 days, if 8600 followed by 8470 is taken out, there will be a higher probability that 8996 formed a very important top, followed by the recent high which we saw somewhere around 8900 levels. And looking at the internal structure of the advanced decline ratio, looking at the breadth, it seems that there has been very less participation across the board. Only a few specific stocks have participated on the up move. Even today, if you check, there has been very few stocks that have been participating from FMCG space, like ITC, HUL, which had managed to cap index at the higher levels. However, Reliance has been one of the major losers, followed by the metal stock. The pressure again starts to be building in the commodity space, and that's why Reliance has been falling from the oil and gas sector. The metal stocks like Tata still looks have started looking weak now. And just imagine now, if the banking starts contributing to the downside in index, I doubt there will be hardly FMCG or IT which can probably help index to be sustaining at the higher level. But it cannot keep on doing it for perpetually, and they should eventually give up. So the take is this: the medium term downtrend, if not already started, should start post budget sessions. And then a very big downtrend we still expect is due on Indian equity markets, which should be ensuing and taking index at much lower levels. However, trading based on very, very important risk management levels are very crucial, given the events which are lying up over next few days. And expiry is coinciding with the railway budget, so the volatility cannot be ruled out. The euphoria has been there, but the stocks are not participating. The entire structure looks like a distribution pattern where the stocks have been moving from the stronger hands to the weaker hands. And we are not buying, still not buying in the story that there is going to be a strong rise from here. As long as 8996 is intact, we do not see the levels of 9500 on Nifty. That 8996 stop is very important, because it has been many weeks now that the same level is not taken out, and we think that level is going to be intact at least for next few months. So next few days is again going to be very crucial. uh, the fall, this current fall, should extend towards 8600 to 8650, post which we should see a minor bounce back in the form of wavy, which will complete a very important top over there. And then the next trend, which is the medium term trend, should reverse back on downside, where the participation will not only be from the banking and oil and gas space, but it will also be from across the board. And even banking stocks should start participating in the downtrend. uh, we have been updating all this research that we I'm talking about right now in our daily research report, the financial waves short term update. And you can subscribe to those research reports, and if you have any queries, I'll be more than happy to address it here. And that is it from me, and I'll keep you posted about the latest structure of Nifty from Elliott way perspective. So stay tuned, and keep visiting our website wavestrategy.com, or keep writing to us at helpdesk@wavestrategy.com for any information you require. And we will ensure that we give the best of the quality in terms of Elliott wave structure, the technical perspective of the market. And in case you would like to attend the training session, then please get in touch with us. 14th and 15th March is the training session. So that's it for now, and thank you very much for tuning in.